I'm going to make a video today about VA buyers in Hawaii and VA assumptions. This is kind of a hot topic right now. At the end of this video, I'm also going to give a little nug about kind of a VA thing that's a little more specific to Hawaii. When I get into the second part of this video after the VA assumption, I'm going to share a little nug and a little opinion that might ruffle some feathers in my industry. Most loan officers and agents, they don't feel this way, they don't agree with me, or they just wouldn't say it in their marketing. Let me just hit the VA assumption thing first. I had this one client who came to us. He was focused on VA assumptions. Today's rate's 5.75 and someone's offering a 2.5 assumption. We spoke, but he went on to interview other agents. I was like, wow, I thought that went good. You go on a date and you're like, I thought that went good. It wasn't good for you. You know, they just wanted to interview other agents. And then he came back to me and he's like, look, no one seemed as skilled and as transparent and authentic. So here we are. And I was like, oh, thanks for coming back. I guess I thought you were gone. I think where I won his trust over is I was honest in that VA assumptions are hard. We are closing one and maybe 2 weeks from now. We're 9 months going to be in our 10th month on this VA assumption. Is that the standard? No. I talked to my escrow officer. I talked to other escrow officers. They've had some go more like 3 or 4 months. We seem to be the longest. It has to do with the servicer. So let me talk to you a little bit about how the VA assumption works. The veteran who currently has the home, who has the VA loan at 2%, 3%, whatever, their loan is probably not with the company that originally did the loan. So they might have started with ABC loan processor. It got sold off in the secondary market to XYZ processor. In this case, this loan processor is called Mr. Cooper. It's been horrible working with them. That's my opinion. It's been really painful, but I get why. So the loan processor that holds the loan right now, they're letting you assume it, but they have no incentive and they make no money when you take over the VA loan. I get it. Like there's a level of entitlement. It's literally called VA entitlement. So even if you're not an entitled type person, it's called a VA entitlement. Like you should be able to get the loan assumed. This is a service for veterans. I'm a veteran myself. I own a home with the VA loan. I get it. But fact of the matter is this money-making institution makes no money when you assume the loan. So they're doing it as a favor, basically. It's going to be a case-by-case basis. If you're focused on the VA assumption, let's talk about it. You're going to see some marketed, but the thing is you and the seller, the buyer and the seller have to be ready for a long ride. We don't know if it's going to take 2.5 months or like in our case, 9+ months to get this VA assumption done. So they rarely work out well. Sometimes they do. The other big thing about that is the money required to do the VA assumption. So let's say the home is worth $1 million. They bought it for $800. They've paid off whatever amount, $100,000 since they bought it. So they owe $700. It's worth $1 million. That $300,000 you have to come up with. Most times people don't have the amount of cash to make up that delta. Oftentimes VA buyers are looking for 100% financing. The one we're doing right now, it's a smaller amount, so we're able to make it work. But you have to come up with the difference in loan value and market value. And however big that difference is, you have to come up with. Now you may ask Derek, well, what about a secondary loan, a second position loan? If the same loan processor offers it, so they're in the first position and the second position lien on the property, that'd be optimal. When the numbers are smaller, I've heard of it happening on the mainland. I don't know someone in Hawaii who's gotten a secondary loan at a really high interest rate in this whole different scenario for the delta of cash needed. It's not saying it can't be done. I just don't know anyone who's done it. For a lot of people, they're PCSing here or whatever the case may be. They have 2 months of TLA. They don't have time for this 9 month, 6 month, 4 month escrow or undetermined amount of time. Now, the loan processors are going to tell you, no, it takes 3 months. I don't think that any of them have enough of a track record doing it to promise the 3 months. It may be that I call up my escrow officer. We're looking at a VA assumption with XYZ loan processing company. How have you done any with them? And they say, yeah, we did the last one. It took 3 months. That doesn't guarantee that yours is going to take 3 months. It's a whole complicated process. So yeah, those are some facts about the VA assumption process. On the positive side, we've done it. We can do it. We're capable. We're going to be honest with you about it. We're not going to set you up to where you're running out of transitional money, whether it be official TLA or your condo you're renting because you're local, you live in Hawaii and you're like, I only have this lease until the end of February. And we're not going to set you up for failure. We're going to be very transparent and we're going to have contingencies in place. So the cliffhanger, that other thing I was going to talk about with VA loan, fact of the matter is they tend to be easier. You see people touting like, oh, VA specialist, VA this, VA that. VA loans actually tend to be easier for a few reasons. The whole debt to income thing is more forgiving. So like when we bought our house on a VA loan, we just used my wife's teacher salary at the time, which isn't big, but we were qualified for so much. Also, typically active duty, it's so easy to get your W-2s and your tax returns. It's like in global or in direct access, whatever your branch uses. It's so easy to pull your documents. Your pay is also public information. So there's no contesting that you're not going to make the same pay next year. Like, it's really hard to get fired from the military. VA loans tend to be easier. The marketing ploy that is, I'm a VA specialist. Well, we'll get into where there is some nuance with the VA loan and where it pays to have an expert who knows the product, but it's a bit of a marketing ploy. So I'm a veteran. Don't need to thank me for my service. I'm a much better real estate agent than I was a military guy, I have to admit. I thank you guys for your service. And we got you on the VA loans. We have you covered. Let's talk about when the VA loan does get a little tricky. Just a couple of examples of where the whole I'm a VA specialist thing actually comes into play. Let's say people are using mixed entitlement. I used my VA loan in Texas and now I want to buy using, the rest of my entitlement with my spouse who's also active duty. I want to see how much we can buy together, or my spouse who's a veteran, or whatever the case. Another thing in Hawaii especially, we have these things called CPRs. So we have condominium property regimes. So what that is I'm going to steal this cushion from the other chair here. So, all right, you have this property, right? And this property is 20,000 square foot and you cut it right into 4. So it's like a plus sign. And so now instead of being one address, so 123 Aloha Street, it's 123 Aloha Street, Unit A, Unit B, Unit C, Unit D. That's called a condominium property regime, or we'll call it CPRing a property. Investors love to do it because now you get to sell 3 things or develop 3 things, whatever the case may be. It makes it a condo. There's a condo map, just like the high-rise building in a sense. And so now you have to have certain documents, certain plans. Are there easements? Do you have to go through someone else's driveway to get to your driveway, et cetera, et cetera. And if it's not on the VA approved list, then it has to get approved. And that's where your lender comes in. That's not something the real estate agent's doing, just to be transparent, but it's something we should be aware of as we are guiding you in this thing and as we're working in collaboration with the lender. Another thing we see pretty often is people who own a home in North Carolina. I feel like I've done 3 of these in North Carolina on the VA loan, but they already got orders. They're coming here. And so what we end up doing is refinancing the North Carolina home to a conventional loan, because the North Carolina home is probably a smaller amount. They owe less. It cash flows better. Refi that to a conventional loan so they can use their full VA entitlement when they get here to Hawaii. That's what I would do. I would want to use my VA entitlement in the expensive place and keep, have the 20% down or the 20% equity in the cheap place. That takes a little bit more time. Our primary lender can help you do that. We can get you refied, etc. But we do have to plan for it a bit more. So if that's something you have to do, make sure you reach out to us months in advance so we can plan for that. VA buying in Hawaii in general. The VA assumption process, it can be a pain and you have to plan for it. You have to have plan Bs, or you have to avoid it and just give up on the thought of it, depending on your timing or your situation. And we'll work with you to guide you on that. So thank you for watching this. If you got to the end, especially, thank you for your service. Leave us comments if I missed anything, if you want me to address anything on a future video. And make sure to reach out to us, coreteamhawaii.com. The website's in the description. See you guys on the next one. If you're active duty, actually anyone, but a lot of active duty people and veterans are going to watch this. If you want to speak to one of our past clients who's bought virtually, pick a letter. Pick J and I'll introduce you to Jane and Johnny or whatever. Like, pick M and we'll introduce you to Megan, right? We'll introduce you to one of our 100 clients that have bought virtually. You can ask them how the experience was, if the home was what they thought, if it smelled the way they thought it would smell, if the neighborhood was the way they thought it would be. If that's something you're considering, talk to some of our past clients. We'll make that introduction.
Yeah.
I would want that. I'm the type of guy that would ask that if it weren't offered.
A lot of our virtual tours will send over to give you a feel of the neighborhood. So, real quick, here's a sample of one of those videos for you to look at.
You can have a drastic difference in style of home from your luxury beachfront on one side and then directly across a complete tear down. But there is always the possibility, to have sort of a mixed bag as far as what your neighbors and your direct neighborhood's going to look like.